Good morning, fellow traders, and welcome to today's live trading session. As you guys know, today is April 19th, 2023, and we're going to do what we've always been doing, which is look for some high quality setups in the market, day trading setups in the market. And before I forget, we do have a private war room session later on after today's session. So then if you want to trade with us, if you want to scout with us, by all means come and you can do that. But with that said, let's move forward and let's talk about some day trading opportunities. So the first pair we're going to look at right now is the US dollar, Japanese yen. And we're currently looking at the 1 hour chart. And based on what we're seeing right now, should we be bullish or should we be bearish on US dollar, Japanese yen? Based on everything that we've shared, even in the training videos, even in our webinars, what is our particular bias for US dollar, Japanese yen? I'll give you guys a few seconds to chime in. Okay, yep. So then Danny chimed in bullish. Exactly, we're bullish, right? So then, we want to trade on the side of momentum. We want to trade in the direction of the trend. The trend and momentum is our friend. So with that said, before we do anything with this as far as analyze what to do, let's see if there's other time frames that show confluence with the 1 hour. Because remember, when we do these webinars, during our first half, we mainly talk about momentum plays or trading opportunities where momentum is in our favor, where there's momentum or directional confluence on multiple time frames. That means that multiple time frames support a bias to the upside. So then let's move up to the 4 hour. So right here we see that the 4 hour is looking bullish as well. So we have that 1 hour, 4 hours looking bullish. So then this is a good setup to actually trade the daily. The daily chart is looking bullish as well. So with that said, what we want to do, we want to look for buy opportunities. We know that's what we want to do. We want to look for buys because momentum's to the upside. So then from here, what we simply want to do next, we wait to see where price will retrace to, or where we could see the buyers come in at. That's the next thing that we look at. So, looking at this chart, there's a few areas that, show some level of interest. For one, we have this level where we have this break entry level at right here, because in actuality, I was going to trade this. I wanted to trade this last night, this move to the upside, but this breakout happened later on. Like literally, I fell asleep, missed it. That's the only thing about trading currency. Sometimes those moves take place during the European session and you miss out on them. But there may be an opportunity to get into this move. So then, looking at structure, looking left, we could see that we do have a particular area right here for one. Right around here where this break entry is. We see this red candle right here, which is our hesitation candle. We see the neckline of this double bottom is right here. Let me just draw that out. Neckline of the double bottom is right here, acted as resistance here. And then we also see this area where this wick is right here, acted as support right there. So then this could be a particular area where price could also find some support or demand. But what else could we do? What else could we, or where else could we find buyers to come in at? Well, of course, look at congestion and look at the wicks. Okay, so right here we see that we have a wick right here, and that coincides with this congestion area, right around here. So then there's a possibility we could see the buyers come in this area as well. So then what I want to do is just draw in a box or zone right in this area, right around here, right around there. And that's going to be my first zone where I look for the buyers to come in at, right around this particular zone right here. that I just drew in. But before I do anything else, let's drop down to the 15-minute. Let's see what we see on the 15-minute. Okay, so yeah, it could actually, yeah, this could actually be the zone, because this is where what we would call our second supply zone, right around here. Second supply. So yeah, I like the way this looks. So let's go back. Okay, so what we're going to do, we're going to look for opportunities to buy on a pullback into this zone. What I'm going to do is set up a price alert for when price hits this zone. So let me do that right now. Let me set up a price alert, add alert. And I want to be notified when price touches this particular zone. So then usually I'll put the date, April 19th. And then we're going to say price testing 1 hour structure support. And then I want to put something if it's a drop down to trigger, which is our trigger time frame, 3-way pullback. Look for that. Look to buy on bull confirm. All right. So as you guys know, we typically want to see a 3-wave pullback. We typically want to see a, you know, leg A, leg B, and a leg C on our trigger time frame, which in our case will be the 15-minute chart. You can also do the 10-minute. Any one of those time frames will work. 15-minute, 10-minute, 5-minute. But let's go down to the 15-minute. And let me ask you guys a question. Do we see a 3-way pullback? Yes or no? What do you guys think? Now, remember what we said about leg A. Like for those who's been with us for a while, leg A is always the zone. Leg A. Okay, I know Danny said yes. Okay, well, let me just say this. You know, leg A is typically the leg that breaks structure. So, you know, right around here, we have structure being broken. This is typically leg A, right? So then right now, what you're looking for is a leg B and another leg C. That's what we're looking for right now. And if we could see that, then, you know, that completes the 3-wave pullback. And then from here is where we want to look for buys on bullish confirmation and trade this higher. So, yeah, that's how that pretty much works. So, you know, right now we just have one leg. We just have an A leg. We don't have the B leg forming yet. So then that's what we want to see. We have what could be the A leg. We need to see the B leg. And then we need to see that C leg right there. So A, B, C. And once it hits this zone, then we're ready for the move to the upside. Just remember that the A leg is typically the leg that breaks structure. It breaks a neckline. It breaks structure. So then that's typically the A leg. But, you know, we'll delve into this in more detail later on. I don't want to spend too much time on it. But if you guys do have any questions on that, I'm willing to answer any question that you may have. But but yeah. So then that's what we're looking for right now for US dollar, Japanese yen. So again, we'll be waiting for price to retrace and test this zone. And then from there, we'll look for an opportunity to buy on bullish confirmation. We'll look to buy, and we could trade it up to these highs right here. Right here, we have these wicks right here. So then, you know, we can encounter some strong selling when price gets to this zone. But if price retraces deeper, which it could, we would want to see potential sellers come in, you know, right around this zone right here. This is our second zone. And there's a possibility that we could see buyers come in here, or the sellers could push price down into this zone, and then we can get a move to the upside. So then those two zones, just pay attention to how price bounces or reacts to those zones, that can give us a clue on how we should trade US dollar, Japanese yen. So yeah, I know Marvin wants to say something right quick.
Yeah, I was just gonna sort of just briefly mention how we could tell that this is bullish. Like, of course, we know that the trend is bullish, and as long as we see U.S. 10-year Treasury yields remain to the upside, remain elevated, that's going to underpin and support the U.S. dollar, Japanese yen. So then, like, I don't want to go too deep into it because I know Mel was doing the day trading setups, but you guys remember when we talked about rate differentials, how there's a spread when you look at currencies and when you compare currencies. And one thing we do know is that the U.S., the Federal Reserve Bank, there's a possibility that we're going to see them either continue to hike until we get to that 5.25 or 5.75% Fed funds rate. And they've communicated that. Some of the Fed members have communicated that the Fed may need to remain more restrictive. So then, while we have the Fed hiking rates on the US dollar, we have the Bank of Japan actually choosing to still remain easy and accommodative and actually keep their interest rate in negative territory. So the very fact that we're going to have this widening differential, this widening spread between interest rates, that's going to favor the dollar, we should still continue to see the U.S. dollar, Japanese yen move higher, as also nominal yields or U.S. Treasury yields move higher as well. So then, I may touch on that again when we get to the fundamental analysis part or the intermarket analysis part, but I just kind of wanted to point out how there's justification for why we're on the bullish side, simply because we know that both central banks are doing whatever they can. The Bank of Japan is doing whatever it can to weaken the Japanese yen, while the U.S. or the Federal Reserve Bank may have to strengthen it by raising the premium or raising the interest rate, for the U.S. dollar. So yeah, that's pretty much what I wanted to share.
Yeah. All right.
So yeah, just remain bullish.
Yeah. So yeah, if you guys don't have any questions, then we can go to the next pair. I actually have quite a number of pairs on my list right now. I won't be able to go through all of them, but we'll tackle some of them during today's webinar. And if we have time, depending on how the private war room session goes, we can look over a few, see what's happening. But yeah, all right. So then let me go to a pair that I really don't like trading that much because I see a particular setup potentially forming. It's quite similar to this one. Is pound yen. Let's do that. GBP, JPY. I figured let's go to another yen pair. See what's going on. All right. So, yep, right here is reacting to this zone that we were actually looking at or looking for a buy opportunity around, right around here. But you can see this reaction right now. But let's dive into this. So, what we want to do is look for an opportunity to buy. It's obvious this is a bullish environment. It's obvious. You can see it with the naked eye. It's obvious. Even a child could see it's going up. So what we want to do is stay on that side of the market. Let's go to the 4-hour. Let's see what the 4-hour is showing us. Is the 4-hour bullish? Yes, it is. The 4-hour is bullish. 4 hours going up as well. What about the daily? The daily is going up as well, right? Is going up as well. Of course, we have to be concerned because we are encountering this zone of potential supply right around here on the daily. That's something that we do definitely have to be mindful of, because if we do decide to go long, we may not want to hold for extended targets. So then that's something that we definitely have to bear in mind. But I'll just call this supply zone right here. Okay, and for some reason it just disappeared, but you guys get the point. We can see sellers coming in right around that area. But yeah, good morning, Bridget. Thanks for coming. Yeah, good morning, everyone. I don't know if I greeted you guys. Just decided to do it just in case I didn't. But anyways, let's go to the 1 hour again. We do see directional confluence on this pair. And what we want to do is look for a potential opportunity to buy. And we want to identify where we feel the buyers can come at. And it's pretty simple. It's not too complex. Look for pretty much structure. Remember, structure leaves clues, right? So right here, we see that price is testing, well, this level. Let me drop a line, and you guys tell me what this level is. I don't know if you guys can see it on your end, but right there. What type of line is that, or level is that? I don't know if you guys can see the number on your screen, but usually you'll see price react to these levels. 167.00. So then, what type of level is that? I guess it's for those who are pretty new. But what type of level is that? Now, okay. So we see that, right? We see prices reacting to this level, right? Which, I guess I'll say it since, others could be busy, but psychological support or institutional level. It's a round number level. So we see price reacting to this level. These are levels that the banks like to use to facilitate certain transactions. So we have 167.00 price reacted to this level. This level is acting as an area of demand or structure. But if you look left, we also have, of course, structure to the left. Look left, structure leaves clues right there. Let me make this yellow. We also have structure right here, right? Structure in this area. So then what we can do, we can identify a zone, and price is reacting to the zone right now. So let's do that right quick. Let me go from, really, it can go from anywhere from here all the way up to here. This is the zone that price could actually react to. But I'm going to tighten it up a bit because we do have this area of hesitation right here. I don't know if you guys can see it on your end, but we do have this area of hesitation right there. So this zone right here could act as an area of demand where buyers can come in at. So what we want to do, we want to look for potential buy opportunities probably right about now. We'll see. But one thing I want to point out before we even drop down to the trigger, we see what is called internal structure. And that internal structure is right here. There's a possibility that price may come into this area, this hesitation, this internal hesitation type candle, where we have this nice wick to the upside, which means sellers can come in right around here. You see this wick right here? This is symbolic of where sellers can come in at. And what we can see price push into this zone, encounter the sellers, and come all the way back down to grab more liquidity, grab more orders before popping up again. That's if it pops up. But we have this internal structure right here. These are things you have to pay attention to because it makes the trading opportunity a bit more complex than just buying and selling. But right around here, we can encounter some resistance, some structure. So we have to be aware of that. But anyways, let's drop down to our trigger time frame to see what's going on, because who knows? We may be able to enter a buy soon. Who knows? But let's go down to the 15-minute. And right now we're on the 15-minute, and this could be kind of tricky, but well, let me just say this: we do not see a three-way pullback yet. All we see is leg A. The more we go over these examples, the more you'll understand why. But we just see a leg A, and then B looks like it could be forming now. This could be leg B that is forming now, and we can find resistance right at this internal structure right here, which will form leg C. And as soon as we get that leg, then that's when we'll look for our buy. So, of course, that's what we're going to expect and look for on this pair. We're going to wait for that to happen. But in the meanwhile, I'm trying to see what alert was that dropped.
US dollar Japanese yen.
Was US dollar Japanese yen. Okay, so that means that it fell a little bit deeper into that zone. Okay, so again, we'll be looking for, of course, price. Hopefully we can get a deeper correction into the zone. And then we'll look for a buy. Now, some of you guys may be asking, Melvin, what if price decides to push up and clear the zone? Right here. It clears up this internal structure. It breaks up and it clears it. Well, if it breaks and clears it, then that's your confirmation that the bulls are in control. If it breaks this high where this wick is right here, if it breaks this wick, that means the bulls are in control. And then from there, what you can do is just simply wait for price to retest this area. Retest this area and then look for another buy. And then just trade it up like that. So yeah, this is the pound yen. This is what we're looking for on this particular pair. So, you know, we'll see what happens. But yeah, we're looking to buy. We're looking to go long. That's our bias. It's obvious on multiple time frames. All right. Yeah, Marvin, I think he wants to say something.
Yeah. Yeah, I just kind of wanted to point out how, you know, earlier in the session, we saw this strong spike, this strong move, almost parabolic move to the upside in pound yen, and really across the sterling pairs or the pound crosses. And the reason for that is because we did have some inflation data come out that pointed to how inflation is still pretty sticky and entrenched in the United Kingdom. We see that it's still it's at double digit levels on a year-over-year basis. I think it came in at like 10.1% year-over-year inflation. So then we're seeing that it's pretty sticky, that despite rate hikes, despite what they've done to pretty much squeeze liquidity and cool down the economy, it's not cooling down at the pace that you know, central bankers anticipated. So then, of course, since we know that inflation is still high at double-digit levels, then there's a likelihood that we'll still see the Bank of England hike rates, possibly hike another 25 basis points to sort of help deal with or cool down inflation. So then we saw the pound rally on that news that inflation is still high, because that means that the bank is going to have to hike rates, which is actually supportive of the currency. You remember when the central bank hikes its interest rate, that raises the purchasing power or the value of that currency. So then there's you know, you're going to see people or traders rotate into the higher yielding currency. They're going to sell the low yielding yen and purchase the high yielding British pound.
Yeah.
So then that's what we saw today. We saw this rally to the upside, and right now we're seeing the market sort of pare back some of that post announcement, you know, gains in anticipation likely for another extension to the upside. And we saw the same thing for the US dollar Japanese yen.
Yeah.
Because most of the yen crosses move in sync. We saw the US dollar Japanese yen move to the upside, and it's in a period of retracement. And we're also seeing the same thing with the British pound, how we saw this spike on the news. It tested this area of supply, and it's correcting or pairing those post-announcement gains.
Yeah. Now, one thing I want to point out is that, of course, well, yeah, before I get into the whole technical stuff, I know when some people buy a higher yielding asset in comparison to a lower yielding, that's what you call a carry trade. So then in this case, pound, you know, the sterling, BOE, raising interest rates or hinting to that, yen, low negative rates, carry trade.
Yeah. And the reason for that, like, they get carry or they get an extra yield. There's an extra, how can I say, bonus, you could say, that's added to your position when you hold it overnight.
Yeah, financing charges. Yeah.
So then that's the reason why some traders like trading on carry, or they like selling the low yielding currency or the low yielding asset for the higher yielding asset, because the brokers actually give you sort of like an extra bonus on top of what you would make on the trade. But that's only when you hold it overnight. So then, yeah, so then the pound yen would be one of those carry positions. Most of your yen crosses are carry trades. The ones that, you know, when you, yeah, I mean, just like we explained, you sell the low yielding yen for the high yielding currency, whatever it is. But yeah, that's pretty much it.
Yep. All right. Yeah. And before I move on, one thing I wanted to mention is that there's a possibility that this could continue selling off. Um, it encountered this area of supply on the daily, and we could see the beginning of a rotation lower. And this is the reason why you have invalidation levels. So let me just add that right quick. Invalidation. I'll explain this later for those that want to know the logic behind it. But this will be our invalidation level right here. If price breaks and closes below this level, then we'll pause a bit on our buy. We'll just pause and we'll be a little bit more patient. We won't be we'll need to see price break above this level in order to consider going back in. But all right. So yeah, this is the pound yen. Are there any questions? Going once, going twice? Okay. So then let's go to the US dollar, Japanese yen. I know it hit that zone. So let's see how that's looking. Um, okay. So we're right here on the US dollar, Japanese yen. We're hitting this zone, but I don't think we have a three-wave pullback yet. I don't think so, but what I'm going to do, go down to the 15-minute chart. I'm going to add a particular level where if price breaks and closes above this level, then we want to look for buys. And that's right here. So if we see price break and close above this level, then we definitely want to look for buys. Yeah, let me just add this right here. So yeah, right now we don't see a three-way pullback. We still see that leg A. We need to see a leg B and a leg C. Leg B may be a retracement back to this hesitation candle or this structure right here before heading down to retest this area or even potentially going deeper down. So, right now we're sitting on our hands. We're waiting. So we'll see what happens. But what I'm going to do, we already know price hit this zone right here. I'm going to set up another alert. And this is where it gets kind of iffy and tricky. Let me set up another buy right around here. And I'm just going to keep it simple. Price testing next 1 hour support. Look to buy? Question mark. All right. So the reason why I have question mark is because this is where it gets interesting. Like as far as invalidation, there's two levels where you can add it. You can add it either at the middle of this congestion area right here. This could be invalidation, but I think the better version of it would probably be where this hesitation candle is right around here, because price could still correct all the way down to here and then push up. But yeah, let's just see what happens. We're just going to see what happens over the next maybe hour or two, and we'll have a better idea of what price may want to do. All right. So then let me do. Wow, I have so many on my list. Let me do one more. Let's do one of the popular ones. Let's do Euro USD. Euro USD. As you guys know, this is one of my favorite pairs. This is the pair I was introduced to at the very start of trading. Also, this is the pair that the guy that introduced us to only traded. He only traded the Euro USD and made a killing, made a fortune off of it. All right, so we're looking at the Euro USD, and what we want to do, we want to look for an opportunity to sell, right? It's pretty obvious. We see price create this double top right here, or this M pattern. Boom. Creates a letter M or a double top. We had this expansion to the downside. Now what we want to do is look for the retracement and then the continuation. So with that said, let's plan our attack. So I'm just going to keep this simple. I'm not going to go to multiple time frames because I think on the 4-hour this is bearish. I believe so. Let's go to the 4-hour. Yep, it looks somewhat bearish. However, oh wow, okay, yeah, you could see price is reacting to this area of structure right here and demand. You can see it. It's pretty clear. So right around here, let me just draw this in. This is structure right here, but with this area, this is also 4-hour demand because of this hesitation and such. But you know, there's a possibility we could see price test this zone and provide a deeper pullback. You know, there's a possibility we could see something like that. But anyways, let's see what the stochastic shows. Well, the stochastic is right around here above 50 right here, so we could see another push lower. But anyways, let's go to the 1-hour and let's plan how we will enter this setup. So what we want to do, we want to wait for price to come to us. We want to look for an area of structure, an area of commonality, and an area where we think the sellers can come in at. And for starters, we know that the sellers come in right at this area of hesitation right here. So that is mainly the first area I would like to look at, is this area of hesitation right here. And of course, you have this candle right here, this long bearish strong candle right here with a nice wick in that same area. Remember, the wicks can tell you where the sellers are positioned. So what we want to do is look for an opportunity for price to retrace to this particular area right here, and then look for an opportunity to sell. So then this will be our 1-hour, you could say, supply zone right here, where we feel the sellers can potentially come in at. And then we'll look for a sell opportunity if we get a pullback into this zone. Now, if you're scalping, guys, we may want to look for buys on a 5-minute. I love scalping the Euro USD. That's one of my favorite currency pairs to scalp. But on a 5-minute chart, you'll be scalping into this zone. So we'll look for opportunities to, to trade this on pullbacks in price. So yeah. So, what we'll do, you can just wait for price to retrace, test this support structure area down here, and then look for your opportunity to go long. And if you want to, you can trail your stop until we get to this zone up here. That's if you want. If you know where price may want to head, then you can trail your stop and gain more from that particular move and such. But yeah, I just wanted to share that. But to go back to our original trading idea, we're looking for a sell on a 1-hour correction into this area of supply. So if price pushes up into this area, what we would do is look for an opportunity to sell, and we will not shoot for extended targets. The reason why is because this is an area of demand. We can even tell from the strong wicks. See these strong wicks right here? This wick right here. Right when price reacted to this level. That wick right there. That wick is pretty nice, pretty long. It's a nice long tail wick. So we can definitely see buyers come in and push price into this supply zone and then we may see a minor reaction from this zone, right around here. So, we'll see what happens. But if price pushes into this zone, we'll be looking for sales. That will be our primary thing. Look for sales, and on bearish confirmation, of course, because this is a strong area of demand. And every time it bounced from this area, we had a nice thrust to the upside, a nice thrust. Every time a nice thrust from this zone. So that's something to be careful of when actually trying to sell into support. You have to be careful. If anything, you may find a better opportunity to buy. And that's why if you want to scalp, you can look for that buy scalp, trade that move to the upside, and yeah, just trail your stop. All right. Are there any questions before we move on? Going once, going twice. I have quite a bit on my list of setups. But let's do one more. Let's do Kiwi USD, NZD USD. Let's do that one. Okay. Wow. For this one, it looks like things are reversing. So I'm definitely not going to look for this one right now. We see that price hit this support, and this could be similar to what we may see on Euro USD. We have a strong correction to the upside. It could indicate a possible reversal. Even on the dollar, we could be seeing the dollar reverse, which is something that we can take a look at. Let's see how the Dixie's moving, or even the equally weighted index. Let me see. So let's see how it's moving from here. Okay, yeah, we do see a pullback happening, but yeah, this could actually be a reversal too. See this double top right here. So let me just draw that in so you guys can see it. We see a left top right here, and we see a right top right here. So this could actually be a double top, like on the 4-hour. Let me see how this looks on the 4-hour. Yep, this could be a double top. You see that? So we're gonna be cautious and patient, because with that US dollar Japanese yen trade that we saw earlier, it could actually be due for a deeper correction and a slide lower or a rotation lower. So and that's with all these dollar denominated and dollar based pairs. So then, we have to be careful. That Euro USD, if you decide to buy scalp the Euro USD, that's a good move. Looking for an opportunity to buy scalp that move up, because the dollar could be selling off. So that's just something that I wanted to mention right quick. So yeah, we could be seeing the dollar sell off right about now.
Yeah, just remember that, whatever you do, just wait for confirmation. Don't just assume that just because price gets to a certain level that you're going to see an extended move in a particular direction, because we could be in for a rotation, like typically around, right around or ahead of the Wall Street Open, or towards the beginning of the New York trading session. We typically see some type of shift or rotation in the narrative, as the ball is passed from the European traders into the US with traders. Sometimes we do see that rotation and shift, in dollar denominated or dollar based assets. So then just make sure that whatever you decide to do, just stick to your plan, follow it to the T, wait for confirmation. And if you do follow it precisely and you find yourself on the other side of the trade, then don't sweat it. That's just the nature of trading. Sometimes you could do everything correct but still be on the wrong side because there's a shift. The dynamic is shifting.
Yeah.
So then when that happens, don't beat yourself up. Just know, okay, I just purchased some market data. I just purchased some intel to figure out what's going on.
Yeah.
And now that I know, I can trade based on this new intel.
Yeah.
So
yeah, we can see the dollar looks like it really wants to sell off because it sold off a little bit more. But but yeah, so then that could change and adjust things on our end. But yeah, we'll see what happens. What I'm going to do right now, I'm going to do one more pair that's not dependent on the dollar, pound CAD. So let me just do that right quick. Pound CAD. But for all you know, that could be rotating. Who knows? A lot of these pairs could be rotating. But on this one, we want to look for actually a buy on the 1 hour. It looks like price is starting to move in advance. Yeah, we was waiting for a pullback and a thrust or push expansion to the upside. It looks like price may have decided to go there right about now, which is kind of interesting. I was hoping that we would see price get to this area of congestion right here, but it looks like it wants to respect this high, this level of structure right here. But yeah, let me drop down to the 15-minute to see if this is a legitimate pullback. Okay. This is interesting because I really don't see it. But as I've mentioned before, there's the 30% of the time where we don't get a three-wave pullback, where we don't see it. So just take note of that. 70% of the time, you will see it. You're going to see a three-wave pullback on about 70%. 7 out of 10 setups, you're going to see a three-wave pullback. But there will be those 3 or that 30% where you don't see it. So then that's something to take note. But typically, for me, I would like to see a leg A. And right here, this could be leg B, or what I would deem to be leg B, but I don't think so. It could be rotating and pushing to the upside now, and then leg C down here. Yep. So if this is the case, if we do get a break and close above this structure right here, then you can just look for an opportunity to buy the dip. Just buy this on a pullback in price and trade this higher. You can do something like that, or you can just not trade it. Since it doesn't give you that three-wave pullback, then just wait. Don't even trade it. Look for another opportunity, because there's other opportunities on the horizon or things you can look at, like the euro pound. Let's go to the euro pound, and that will be the last setup before we hand the mic. Before I hand the mic over to Marvin. All right. Okay. So yeah, this looks a little bit better. So right now we see that we had a strong impulse to the downside. Price is in the middle of a correction. Where did it correct to? Look left. Structure leaves clues. It corrected to structure exactly the way I would want to see structure tested, right around here. So it corrected to this area, and now we're beginning to see price begin its move or impulse lower. But in the same way, does this have a three-way pullback? Well, let's check. And with the way I count up, no, we don't. Because this is when we just get our initial break of this neckline right here. We get the initial break right here, which makes this leg A. Then we have leg B. And then we have leg C. So leg C could actually take us to this hesitation candle right here, where we could see sellers come in, which is what I think will happen. Yep. So then, we'll see for that. So then let me just mark this down. Yeah, what was that alert that popped up? I didn't quite see it. Yeah, I didn't quite see it. So it's definitely heading lower to US dollar, Japanese yen, if that's the case. But anyways, we have this area of supply right here, and price could make its way up there. I'm going to hold off on euro pound for now. What I like to do, I like to see that three-wave pullback. If I don't see it, then I'm not going to go in for those day trading setups. And sometimes even for scalps, I look for the same things even when I'm scalping. But yeah, we'll be looking for that. We do have invalidation right around here. This will be our invalidation level. So yeah, yeah, we'll see what happens. I'm banking on the buyers coming in right here. You see these wicks right here? I'm banking on buyers coming in and right around this area, and we can get that C leg expansion up there. That's what I'm assuming could take place. So, you know, we'll see. But yeah, this is the euro pound. I don't want to hold too much of your time, but yeah, that's pretty much it. So yeah, we have we talked about the US dollar, Japanese yen, pound yen. We talked about pound CAD just now, and we talked about euro pound right here. So yeah, with that said, let's look at how US dollar, Japanese yen is forming, and then I'm going to pass the mic back to Marvin. Okay, so yeah, it's pushing deeper into this zone. If we see a 1 hour candle close below this level, then that could mean a lot. It can mean something. So yeah, in a few minutes. And then on the 15, we still have this leg A. Yeah, this is definitely due for a nice correction. Deeper. Yeah, deeper retracement or correction or pullback. All right, so then I'm not going to hold too much of your time. What I'm going to do is pass the mic over to Marvin. I hope this was helpful. And yeah, you guys, yep, stay tuned. All right. Okay. So yeah, so I'm gonna try to you know, I always say this, you know, every time, but I'm gonna try my best to sort of explain to you guys what's going on, and even why the market has been moving the way it has been for the past few weeks. Because for those of you guys that have been active in the market, you've been actively trading, whether it's currencies, whether it's stock indices, you will know that you know, sometimes like it can be pretty challenging to sort of figure out what's going on. Just like on yesterday, we saw it rally. We saw most of our stock indices rally. Let me just go to NQ real quick, NQ1 or just US 100, either one of them. But okay, this is but you can see here how even on the 1 hour, it's been pretty much in consolidation. It's just been trading within a range, oscillating back and forth in this whipsaw like activity for the past few sessions. Because this isn't just one trading day. This is pretty much since Monday. It's been locked in a range. It's been trading back and forth. And it can be kind of hard to trade within the chop, to trade this, because you know, when you're trying to trade and go for extended runs, you know, it's not providing you the opportunity to know for sure what the market is going to do. So then pretty much what some traders do is they just play the range. They just stick to this range. They just look for opportunities to sell at resistance or buy, you know, at support. They trade the edges of that consolidation. Yeah, exactly, the extremes of it. But there's a reason for this uncertainty, this indecision in the market, because this sideways trading, it could be reflective of consolidation, accumulation, or distribution, depending on what side you think it's going to break out on. But it's really reflective of indecision and the investors pretty much sitting on the sideline, not knowing what to do because there's conflicting signals in the market. So let me explain. So before I move forward, okay, let me just talk about the Nasdaq. We see that the Nasdaq is sliding lower. It's in negative territory for today, just like most of the other major three equity benchmarks, futures benchmarks. They're all trading in negative territory for today, and we can see that with the Nasdaq sliding lower. But I want to point out why the market is giving conflicting signals. So then, what I'm going to do, I'm going to point out or pull up one of the yield segments that we haven't looked at in a while, the yield curve, but what the market is sort of seeing and what the market has been pricing in. So let me just do this real quick. And I'm going to go right here to the US 30, US 5s, 30s spread. The US 30 year, the 5-year spread. And let's just go to the daily chart right here. And I know, yeah, this is actually, yeah. So you can see here how when we look at the 5s 30s spread, or the 530s curve, that this yield curve is no longer in inverted territory. You remember, one of the signs that we see inflation
especially, in the most popular yield curve, which is the 2s 10s yield curve. We see that that's below zero. It's in negative territory. And actually, most of the yield spectrum, or the spectrum of the yield curves, are in negative territory. But what's interesting, we see this 30-year, 5 years trade is in positive territory. It's actually not inverted, but it's flattening or moving and steepening. Moving in its pretty much normal uh, format or structure, where you have a higher premium offered on the long end of the curve versus the short end of the curve. So we see that there's a higher interest rate on the 30-year compared to the 5-year. So then we see this. So then in this case, like when we look at this chart, and then when we also look at, let me just do this real quick. I'll just pull up the 2s 10s yield curve on the right, right here. Okay, let's do. Let me just pull this down. Go to the section. That is right here. And we're going to go to the daily chart. Okay, so let me just do this. So we can see here how for the US 2s, the 10, yeah, 2s 10s yield curve, although it's still below zero, which means that it's pretty much inverted, still in inverted territory, we can see how it has flattened a lot, or it has become less inverted. It went from 110 basis points down here, and at one point went all the way up to a peak of almost 20 basis points. It was really almost above that zero level, or close to the zero level. But we can see that it settled down to around 60 basis points, or in negative 60 basis points. So then we can see here how the market is sort of already priced in or discounted that the Fed should be cutting rates, and there may be rate cuts coming soon, or we may have one more rate hike, and then we're going to hold and then eventually do rate cuts towards the end of the third quarter, or around the fourth quarter. So the market is already pricing that in. However, when you have Fed members say that we need to still remain restrictive and keep hiking rates, even hiking close to 5.75%, then that's where there's conflicting signals. And that's pretty much what happened yesterday when we saw the stocks rally, and then pretty much around, like, not too far away from the Wall Street open on yesterday, we saw them sell off and dip, and then it began to consolidate for most of the day. And it was due to comments that came out that pretty much conflicted with what most traders and investors thought, because we're thinking, well, the Fed may have to start cutting rates soon and stop the hiking cycle, simply because of what we see happening in regional banks. That they're still, we're still not out of the clear when it comes to regional banks and the liquidity or the credit crunch that may happen as a result of higher interest rates. Higher interest rates is going to discourage banks to lend out credit or lend out money, and that's going to eventually slow down the market. But also, we're going to have, we've been having this run on the banks. We've been having deposits or withdrawals of money from these regional banks in a rotation into more of your legacy banks or your big banks. So then we've been seeing this for the past few weeks. So then there's the possibility that with these higher interest rates, we may see another crisis coming down the pike in the next 6 months, where we see more regional banks impacted. And the reason why is because a lot of these regional banks finance the commercial, real estate market, and really it's commercials that has really been hurting for the past few months. It's been really suffering. So then, with that being said, okay. I know I'm saying a lot, but what I'm going to do, I'm going to go to one of our favorite sites. Well, yeah. Well, before I do that, I'm going to go to somewhere else. But let's do this real quick. Let me stop sharing. Then I'm going to pull up. Okay. So yeah, okay, right now we're at Google. So let me just type up this, okay, before we move for Fed Bullard, because he was someone that pretty much shared some statements. He said on yesterday, Fed's Bullard discounts recession talks, favors more rate hikes. Fed should hike rates further for inflation, Bullard says. Bullard repeats call for more Fed rate hikes. So then this is pretty much different than what pretty much the market is implying with what we see with the yield spread. We see the 30s 5-year is above, in positive territory. We see 2s and 10s pricing in rate cuts. But according to Fed Bullard, he's saying, no, we need more rate hikes. And he's not the only one. Let's just go to, let me just type Bostic. Because Fed Bostic also said the same thing, but he didn't say it with as much aggressiveness, or he just pretty much said, sees one more quarter point rate hike, then hold for quite some time. Fed likely to hike rates one more time and then hold. So then he's in the camp of hike and hold, like higher for longer, tighter for longer, but they're not going to raise rates higher for longer. So then he's all for hiking one more time and holding, whereas Bullard is saying, no, we need to continue hiking rates. There's more rate hikes because we're not dealing with inflation. So we're seeing these conflicting messages, and this is the reason why we see it's hard to interpret the price action signals, simply because we're seeing these conflicting reports, and we still got, banking woes on the table, and a whole set of other issues. But yet at the same time, we're still seeing solid jobs growth. We're still seeing a tight labor market. It still seems like retail sales activity is still high. Consumption is still pretty high despite the higher interest rates. You would think that if things are more expensive, since goods and real estate and property and just buying is more expensive, you would think that we'll see a curbing in consumption behavior. But actually, we're still seeing it remain, and even in with the discretionary spending as well. So then, yeah, it's an interesting environment that we're in. And the thing is that one thing we always tell you guys, just pretty much look at price action, because price action will reflect what the market really feels about news, and it's all going to be eventually priced in and discounted within the price action. So then let me do this real quick. Let's go to our economic calendar real quick. I'm just gonna go to daily FX because we haven't been there in a while. Daily FX, their calendar, and okay, I don't know why they even have this, but of course, let me just review what was released overnight, because we had a slew of data, inflation data, come out on or during the European session. But just like I mentioned earlier in the session, with when we discussed the pound yen, you can see that inflation is still at double-digit levels. It's at 10.1%. It actually picked up. The forecast was for it to drop to 9.8% on a year-over-year basis, but we still see that it's still pretty sticky. And even on the core side, which excludes food and energy, we still see inflation is still pretty entrenched. It's pretty high. So this is the reason why we're seeing the pound to sterling rally, simply because we know that the Bank of England may have to hike rates and continue to hike rates until they reel in inflation and curb inflation. So then we got that. They also came out with some PPI data that showed that inflation was still sticky as well, above, beating the forecast. So all of the inflation pricing pressures in the UK is still pretty high. So yeah, they definitely have a long ways to go. But if we go down, we see South African inflation sticky as well. It came in more than what analysts had expected. And then we see the same thing, we don't see the same thing for the Eurozone. It came in line with expectations, which is interesting. So then we see that came in, quite well. But if we go down to today's docket, U.S. docket, we don't really have much on the U.S. docket for today. Really, this whole entire week is a light week, and really most of the attention will be focused across the pond. whether it's in the Eurozone, whether it's in Asia, whether it's China. We don't really have too much US data coming out. And pretty soon we're going to be in this Fed blackout period. I think that's going to start Saturday because, you know, the next Federal Reserve meeting is, I think, May 3rd. So we're going to go through that 10-day blackout period where we don't hear from any Fed members. And that's going to start on Saturday. But for this week, we don't really have, or for today, we don't really have much US data, not even high tier data. We did have Canadian housing starts came in. Of course, it fell. It came in lower than, what I'm saying, it came in lower than the forecast, and it fell from the previous month. So then that was that, but we don't really have much on the docket. So what's really going to drive price movement this week is really earnings data, the earnings report. So then we got to pay attention to what comes out with the earnings data, because they can give us an indication of whether or not we're seeing growth in the U.S. economy. We can see if we're seeing their earnings data improve, if we're seeing revenue come in line with expectations or improve in these companies. Their guidance is pretty well, then that can be reflective of growth, and that would definitely have an impact on how markets move, even the U.S. dollar. But we don't really have much on the docket this week. So then we got to pay attention to the headlines and also technicals. But we do have weekly oil inventories coming out later on. This is a weekly number. So then we'll be looking at that. But there's not much coming out until later on in the Asian session, where we do have Kiwi or the New Zealand inflation data coming out, and Japanese trade balance data. So yeah, that's with that. So then let's go to FinViz, one of our favorite sites, to see what our heat maps are showing us for today. And right here, let's go to the futures. All right, so then, okay, so then we're at this futures heat map right here, and we see that the entire futures heat map is pretty much, most of it's covered in blood. Like, it's pretty much selling off.
It's not that bloody.
It's not, yeah, it's not as bloody as it could be. But you can still see here
See
that
the energy
across,
sector got hit hard.
yeah, I mean, across really multiple asset classes, we're seeing them sell off. We're seeing our equity future sell off globally. We're seeing our energy sector sell off. This is, you know, pretty interesting. After we did see it spike, you know, towards the end of March, we saw that huge rally in energy because OPEC decided to, you know, cut energy production. Mm-hmm. So then, but then we're seeing now pretty much it's sell off. But we're seeing our commodities, you know, sell off. Gold, you know, our precious metals, along with some of our base metals. Dr. Copper is also selling off. So then the way the futures markets are pointing, they're pointing to a negative open on Wall Street. They're pointing to a possible sell-off. If we look at Dr. Copper and Dr. Russell, they're both in the negative territory, which is sort of reflective of growth in the U.S. domestic picture. So then it may be like we may have to look for opportunities to sell more of our, you know, high yielding, risk sensitive assets. And if we look at the VIX right here, we see that the VIX is sort of picking up. It's up 15% for the session. Now, this is VIX futures, not the same as the S&P 500 VIX that we normally see. You know, this is the VIX futures, but we can still see here how it's up by 15%. It's at 19.70, and that can be an indication of some risk aversion in the market as traders look for an opportunity to hedge some of their riskier positions. So then this is sort of the sentiment before the Wall Street Open, that we're seeing this negative sentiment, this doldrums sort of kick in, and that's primarily due to all of these Fed, you know, Fed members saying that we need additional rate hikes. But not only that, we saw this morning's inflation data coming out of multiple segments of the world pointing to high and sticky inflation, which means that globally central banks may have to continue tightening their monetary policy, crushing demand in their economy in order to reel in pricing pressures and soften inflation. So then that's going to weigh on equities across the board. It's going to weigh on risk sentiment across the board. So yeah, but let's go to the Forex heat map. See what's happening in the Forex space, and we can see here how the pound is leading for today. You remember we said that the pound is strong simply because of the inflation data, followed by the Kiwi and the US dollar, which is fairly, neutral. The US dollar was strong, but it's pulling back, just like we showed you guys in the chart earlier. And we also see the weakest currencies for today is the loonie, the Canadian dollar, followed by the Swiss franc and the Japanese yen. So I guess we could just look for opportunity to sell the loonie. I know the loonie is definitely selling off because of oil. You remember, Canada is an oil producing economy. So then their economy is strongly tied to oil. So then as we see crude oil selling off, that's going to weigh on the Canadian dollar. Now, it doesn't happen all the time. Sometimes that correlation decouples because there's other areas that analysts focus on and the market focuses on or prioritizes above energy. But for today, the fact that we're seeing a strong sell-off in energy, that's going to weigh and put pressure on the loonie, the Canadian dollar. And we also had some housing starts data that came in softer as well. So then that's going to definitely contribute to the weak Canadian dollar. But yeah, look for opportunities to buy the pound for today and sell the yen or sell the Canadian dollar, or one of these pairs. But let's go to crypto, because crypto has been in the news lately. There's a lot going on in the area of them trying to regulate cryptos, but we can see here how it's pretty much bloody across the board. We've seen, Bitcoin sell off. What's interesting, the weakest currency for the session, according to this spectrum, is Ripple, followed by Litecoin and Ethereum. So then, yeah, it's interesting what's happening in cryptos. I know there's been a lot of, testimonies in front of Congress, questioning whether cryptos is a security, whether Ethereum is a security or not. There's just a lot happening. But yeah, follow this. And this could also be part of, the whole sell-off, what we see happening, where the tail is wagging the dog, where what we see happening in the cryptocurrency market is also affecting legacy markets or your traditional asset classes like stocks. So then this could also be playing a part in weighing on equities as well. So yeah, so it seems like across the board, since we're seeing a sea of blood, red, we don't want you guys to be alarmed. It just simply means that assets are selling off, but it's more of a controlled sell-off. It's more coordinated, and there's a reason for it. It's not fear-based or fear-driven. It's just that we know that traders are going to sort of pull out a risk. They're going to sort of deleverage and do it in a safe way because they don't want to hold too much risk when there's so much uncertainty around. So it's not capitulation. We're not seeing massive capitulation. We're seeing just a coordinated sell-off just for today. But yeah, that's pretty much it. I'm not going to continue for too much longer. I think we're going to go back to our charts for now. Let me just go to our chart and then pass the mic back over to my brother so he can continue for the rest of today's webinar. Yeah, yeah, I may not do much. I know we're going to open up the private war room. So if you guys are interested in that, you can join us. But yeah, let's look at for starters, let me remove this. Let's look at what's been happening thus far on those setups that we looked at. Starting with the US dollar, Japanese yen. Let's monitor, let's track. Let's see what's really going on before we pivot and move on. But US dollar, Japanese yen, 1 hour chart, we see this correction now in this zone, and it's responding to this area of structure. The only thing right now is that we violated this invalidation level. So then I would need to see price break and close above this invalidation level on the 1 hour before I decide to get in. So I need to see a 1 hour break and close above this invalidation level. So, we'll see what happens with that. Let's go to pound yen. Pound yen. Okay. So yeah, pound yen. Is definitely still in the same area, so to speak. We didn't get a push into this zone right here.
We still need to see that three-way pullback, I believe, even on pound yen. Yep. So yeah, we didn't get that yet. So we're just gonna wait for that to happen. Okay, and then from there we did look at euro pound, and I think that is probably looking somewhat similar. Yeah, okay, this is the move we were looking for. Price reacting to this low, and we're going to see that C leg expansion up up higher. Remember, that's what we're looking for, that C leg now. You go to the 15-minute chart. Yeah, this is all leg A. This correction right here is leg B, and now we're seeing the beginning of what could be leg C. So then we just need to see that leg C complete. Hopefully, we'll see stochastics get to overbought, and then we can look for our opportunity to sell euro pound from there. But all right, guys, I guess that's it. I'm not going to really do the top-down analysis portion. But if you guys have questions about anything we've talked about, if you have questions concerning a particular asset, if you want me to look at a particular asset or commodity or currency pair, then please feel free to let us know now. And then we'll try to analyze and answer your question or your concerns, whatever it is. But if not, then we can definitely close out a little bit earlier in preparation for today's private war room session. So do we have any questions? Going once, going twice. All right. So I don't think we have any questions from anyone, so I guess we can end pretty early today. Thank you guys so much for coming to today's session. We kept it short, just about, well, yeah, it was over an hour, a little over an hour, or a bit over an hour. But yeah, we're gonna take a few minutes, and then we'll meet you guys in the war room. You guys can jump in there now if you want. I believe Marcus is going to be in there, but yeah. So then we hope that you guys have a wonderful rest of your trading day, and until we see you again, remember to always count your blessings, not your pips. So we pray that you guys have a wonderful day, and we'll definitely talk to you guys soon. Be encouraged. And yeah, we'll see you guys soon. We'll see you guys within the next few minutes. I'm going to do a few things. It's going to take me maybe about 10 or 15 minutes, and then I'll jump right in there. But yeah, any one of you guys can jump into the room, get things kicking off right now, and yeah, we'll just go from there. But all right, thanks again, and we'll definitely talk to you guys soon. You guys have a wonderful, wonderful rest of your day. All right, God bless you guys. Talk soon. All right, okay, bye.